Hi, I'm Ernie Burns with Burns Estate Planning and Wealth Advisors. And our newest advisor here, Tim Dahlberg, he is a new advisor here at Burns Estate Planning and Wealth Advisors, and we've opened 2 new additional offices. So now we're going to have 12 offices in the South, from here to the East Coast of Florida overall. Today, we're going to be discussing something as the fourth bucket. You've heard us talk about the 3 income buckets, which are 3 industries in the United States: banking, Wall Street, and the insurance industry. The fourth industry really is real estate. And a lot of our clients have a lot of real estate. Some of our clients have nothing but real estate. And we're going to basically talk a little bit about that. And many more clients now want to get into the real estate venue to diversify. They're not really sure how. So we're going to talk about some common practices on how to do that, investing into the real estate market from there, and being a little bit more diversified in those areas too. So welcome to Coffee Chat. All right. So Tim, let's start off here. I'm going to talk about leveraging, which is not very new, but we want to understand how to do it itself. So if, for example, leveraging your house or a building you want to buy, or a few houses you want to buy, in a sense, you put down $100,000 on a $500,000 property. It's 20%, which is a small percentage of funds used to basically purchase that property. Number 2, which is very common. This is something a little bit more common, and that's whether somebody that's not used to the real estate market will first dabble in. Another, financing rental properties using a down payment strategy real estate investors use to mitigate risk and maximize potential rewards by spreading investment capital losses across multiple homes that generate multiple cash flows. And those cash flow streams can be quickly positively portfolio, but like it said in here, like I'm talking about, there's a lot of risk to that. So you make sure that you want to value that property correctly. In other words, you want to purchase it at the right price. That's really how you make money in the real estate market. And that goes from ideal 1 to ideal 2 here. Purchasing one property or multiple properties. The purchase price is really where you make the money. What I mean by that is, when you go to sell that property, you want to make sure you purchased it for well below that value. Obviously, you're going to be getting income from it, but you want to make sure you purchase it at the right price. The risk, that's one risk, investment risk, but also in the sense of litigation risk. You want to make sure that you open up an LLC to protect you from any type of problems down the road, which is very, very important. So investment risk is very, very important, as well as your legal risk there. Let's talk about leveraging first, and it is a technique real estate investors use to increase potential returns and build wealth long term, also known as other people's money. Real estate leverage involves using debt plus a small amount of equity used for that down payment, like we just talked about. But key takeaways in that leverage: increase returns. Conservative use of leverage helps investors balance that risk and potential reward in the future. But too much leverage in a large amount can basically increase your risk to the point that you can't afford that property, or put strains on your household. Make sure you're mitigating that and making the right decisions.
Sure.
That's a negative cash flow. You don't want that. Third, you can also purchase real estate investment, like a real estate investment trust, REIT, as we call it in the business, or a mutual fund that focuses on REITs, or real estate, in other words. This is another way you can invest and have some nice returns without a lot of headaches on insurance, property taxes, and etc. legal issues in the future with homeowners if you rent properties to them or leasing property to them. However, just like picking a stock, you got to pick the right REIT, right?
Absolutely.
Because REITs are tying your money up for usually around 7 years, and they're not that liquid. They're not very liquid. However, the positives there are they can be, if you pick the right REITs to invest in, positives is you can use it for an income. So a lot of retirees, we use some REITs or mutual fund REITs to generate income in retirement. But selection is very, very important up front.
Sure, it is.
So this is my suggestion off the cuff.
Mm-hmm.
What is yours, Tim?
Well, that's good. I think that, I think you're right on. I think you go back to, one of the things that you were talking about is the, buying at the right price. I mean, we're at a time where we've seen the last few years this explosive growth as far as home prices, right? So there's always there's time to be a buyer and there's time to be a seller. right? And I think what we've seen in the last few years, this appreciation has been phenomenal as a homeowner. But now we're at one of the points, especially with mortgage rates being a little bit higher. It's hard to get in. It's hard to get into some of these houses, some of these investments, right? And I think it goes back to what you said of using other people's money. Banks aren't lending as much, right, for traditional ways of leveraging and trying to buy real estate. So you kind of do have to be creative. But one of the main things you kind of talked about was the market risk. Is it time to buy? Is it the right time to buy because these prices are up? Am I getting in a good price? And what kind of return am I going to get?
And that goes to where you're living now, where you're looking at real estate, where you're looking to buy real estate.
Sure.
If you're on a resort area on the coast, that property is going to stay higher longer because it's very popular.
Yeah.
Okay. If you're in a smaller town and you're looking to buy some country property or an area that's just not very developed, you'll get more of a deal there.
Yeah.
You know, but if it's up and coming development and you think down the road, still might be able to get a deal and just have to hang on to it for a little while. So the key is where you're purchasing a property at, because mortgage rates are dropping, okay? And we know the feds are going to lower interest rates, probably a total of about 1% this year. 3 cuts, but I think a total around 1%. If he goes over that, that'd be great. But it would help. But looking at real estate, I think next year will be a gold mine.
Absolutely.
Long term.
And you're also looking at, we're looking here in the South, right? Everybody kind of wants to be in the South, retirees, right? Being up north, Midwest, they're looking to be down here in the South. And then we also think about destination. When you travel, people want to come down, they want to have vacation here in the South because of the beaches. Retirees are coming down here because of some of the tax benefits, right?
Yeah.
Cheaper property taxes, no Social Security, income taxes in certain states. There's some really friendly tax states that are down here in the South. So one of the things, there's multiple ways that you can do as far as the rentals and purchasing the house and using real estate as a way of building wealth. You talked about it, buying a house. Are we going to rent it? Are we going to actually flip it? Most of the people that we see buying, renting, especially with our Airbnb, VRBO. This is where you could go in, you can buy a property, right? Hopefully if you buy it at the right price. You start looking at cap rates, but this can actually generate some short-term rental income, right? Not only that, it can actually help with building equity into the home. There's tax advantages to doing that. You think about some of the things that you could write off through the LLC, some of the tax if you do a 1031 exchange, when you're going to rent and sell it, deferring some of those taxes. So there is a lot, and we like to use real estate as far as part of building wealth here at Burns.
So diversifying yourself in itself. So it could be vacation property. It could be, like you said, flips, which is, you really want to kind of get your hands dirty in that situation if you want to do flips. Not my cup of tea.
No.
Also, something that's become very popular, these subdivisions popping up all throughout the country.
Sure.
Those lots are available. I think they're going to have some deals coming on late this year, next year on some of those lots that you can purchase. You might have to hold on to them for 6 months to 3 or 4 years, don't know, but purchasing them at the right price is key, like I said earlier. So this is our suggestions and our ideas right off the cuff. A REIT is also a good avenue if you want to look at them. It's not a very popular product to most advisors, especially retirement advisors like ourselves, but it is a way to generate income from rental income from investments in itself. So hope this is helpful. It's not really our main goal when we sit down with the client and put them into real estate. Obviously, we're dealing to the investment field. However, at Burns Estate Planning Wealth Advisors, we are able to help clients nationwide. And what we basically focus on is retirement advisory services. We use Fidelity and Charles Schwab as two custodians, as well as a variety of insurance companies. So if you're looking at retirement and you don't have a game plan yet, we build retirement plans for that purpose. And if you're interested in some of these ideas or suggestions, please give us a call at 1-800-308-4416. We're one of the largest wealth management firms in the South. Look us up on the web at birdsestatePlanning.com.